This is the You, Me, and BTC podcast.
Cryptocurrency decrypted.
Welcome to episode 83. Today's show comes from a special Liberty.me live event that I hosted last week. I was joined by Bitcoin brothers Sam and Steve Patterson to chat about what exactly is going on in Greece and how there might be some opportunity in the financial crisis. We'll also touch on the importance of diversification, the block size debate, educating the Greek people, and much more. I should mention that during yesterday's YMB live show, we plugged some different topics for today. So if you're looking for our discussion about the blockchain and chicken abuse, you'll have to wait until next week. Enjoy the suspense. Your host today is just myself, Daniel Brown. Here we go. All right, welcome Liberty Me members to Liberty Me Live. This is a Thursday night, getting ready for a Bitcoin Brothers live show. Super excited to be here with these guys. I am Daniel Brown, and you may see me here and there on Liberty Me. I'm from the You, Me, and BTC podcast, and we do a live show. All of that goes through Liberty Me, so maybe you know me, but if you don't, here I am to chat Bitcoin with two really awesome dudes. We'll start with their brothers. That just makes it all the more exciting. So I will start with Sam Patterson. He is the older of the two, and he's done plenty of work in the Bitcoin space. He wrote one of the earliest guides for Bitcoin that was ever available, and it was on Amazon. But he says nobody should buy it yet anymore because it's way outdated. I disagree. I think you should buy it just to give a Greek guy a leg up. So anyway, it's out there, a guide on Bitcoin. And he also wrote one for Liberty Me, which is still available in the Liberty Me library. And I'm not 100% sure, but I've read through that a while ago, and I would imagine it's still relatively relevant. Is that true, Sam?
Yeah. It was written just to be a basic overview, very nuts and bolts of how to actually get off the ground with Bitcoin. And I think it still would be useful for folks if they're interested to start using it.
Sweet. Yeah, check it out in the Liberty Me library. It's called Up and Running with Bitcoin. He did some work on Open Bazaar, which is kind of a decentralized marketplace that obviously kind of centers around cryptocurrency or the same kind of concepts. And that's what he says is really important to him. He has a little tagline that he likes to use: empower people through decentralized technology. And that's what he's working on. So glad to have you, Sam. Thanks for being here tonight.
Yeah. Hey, thanks for having me, Daniel. I appreciate it.
I should also mention he's a big fan of unschooling, which I am completely on board with, and that's a cool thing. We won't get into it a ton tonight, I guess, if we focus on Greece and Bitcoin, but I like that. So
yeah, well, I appreciate that, and I would just add, not just a fan, but I have 3 children who are being unschooled at the moment, so
Yeah, that's great.
As well.
Yeah, I hope they become the greatest geniuses that this world has ever seen. And we can prove it to everyone which way is better. And we also have Sam's little brother, Steve Patterson. Thanks for being here, Steve. How's it going?
It's going good. Thanks for having me.
So Steve is also a Bitcoin author. He wrote a book called What's the Big Deal About Bitcoin, and that one is also available in the Liberty Me library. So completely free to all you members out there. Just jump on to liberty.me/library and look for The Big Deal About Bitcoin. It's another one that's kind of an intro and a little more conceptual as opposed to technical. So anybody, it should be a great read for anybody. And also, that's writing is what he does. He's a freelancer for the most part, and he has a website, steve-patterson.com, with a blog there. Talks about philosophy a lot, and he's from Atlanta, Georgia. There we go, Steve.
Thanks.
Cool. So tonight's topic is Greece, and I'm pretty darn excited for this because on our live show, which we do every week on Liberty Me, we do Bitcoin news, and of course, Greece has been a hot topic in the space. Not necessarily, I mean, not Bitcoin itself always, because obviously there's a lot going on over there that doesn't involve Bitcoin, but it has some outreaching effects that definitely do get to Bitcoin. So I'm just gonna start it there. I think Sam's gonna take this, but whatever comments either of you have, I think the place we should start is just tell us what the heck is even happening over there. I mean, it's pretty big in the news. Most people probably hear about it here and there, but to recap, or to maybe if anybody hasn't heard about it, what is going on in Greece right now?
Yeah, sure. I can give sort of a brief overview of what's been happening there. So as most people probably know, Greece is a part of the European Union. They are joined with a bunch of other European countries in a common currency that they all use called euros, which I'm sure people are familiar with. So their economic fate is somewhat tied to the fate of a whole bunch of other European countries. What Greece has done over the past couple generations, especially since the 70s, is borrowed an ever-increasing amount of money year after year. And I don't need to tell this audience the issues with government spending too much money and taking on too much debt. I'm sure everyone's familiar with that. But Greece is sort of the poster child for that. And a big part of that is that they have a very expensive pension system. In fact, if you look at their pension system along with some of their other social safety nets, it's around 33% of their whole GDP. And that's just the pension system. It doesn't include the other government services as well.
That's insanity.
It is insanity. It's massive, and that's been growing year after year. So what happened is they never really reined back the spending. They just started to take on more debt to pay for it, and eventually it got up to about 174% of GDP. Most of you are probably familiar with what GDP means, gross domestic product. Basically, it means everything that they make, the value that they make in a year, their debt is actually substantially more than everything that they make in that entire year. So it's very difficult to come back and actually pay debt down when it gets that high. So several years ago, in 2010, they were on the verge of defaulting on their loans. They weren't able to pay them back. So they went to the rest of the European Union and said, we need a bailout. We can't pay, and we need a bailout. And the rest of the EU said, gee, that was really bad of you. Please don't do that again. Here's $260 billion. That's the EU and the IMF, the International Monetary Fund, as well. Bailed them out to the tune of about $260 billion. Now, they did it saying, yes, we're going to impose austerity, which is this term that we've heard a lot. Basically means these drastic slashed spending cuts where they, right down to the bone. In reality, it just means, a couple percentage points less than before, and they still were spending enormous amounts of money. So even that attempt for austerity, though, was very politically unpopular in the country. So they avoided default in 2010 by getting a huge bailout, but the politics of that were very unpopular, and a few years later they elected open socialists to government in Greece, right? The socialists ran on an anti-austerity platform. They were saying, we don't need to agree to those cuts. We'll do our own thing. And so the borrowing continued per the norm. And of course, just basic math states that it had to go through it again, right? They're going to default again. So a few months ago, they were on the brink of default again. And they went back to the European Union again and the International Monetary Fund and said, we need money. This time, the creditors were saying, well, we're only going to do this if you agree to some very specific, terms that are a little harsher than before. And the socialist president there, again, didn't want to do something politically unpopular, so he put it to a referendum. He put it to a vote. The country voted it down, right? They voted and said, no, we don't want to take your money and agree to these spending cuts. And so what happened was bank runs started happening and capital controls were put in place. The economy was starting to grind to a halt because default was imminent, right? They couldn't pay their bills back, and credit, was going to become an issue for people. So anyway, they went back to the EU, the Greek president, and without a plan, really, because the referendum shot it down, and the EU, again, gave them very similar terms. This time, Greek parliament actually passed those terms, much to the displeasure of the Greek people. There were riots in Athens and other places. And effectively what occurred, this is just a couple weeks ago, was that the can was kicked down the road again. We're going to go through all of this again, and I don't know how long, but there's nothing structurally that's been really, done to prevent this from occurring again. So the question, and that's sort of the background of where we're at. The question in all this is, why is Bitcoin being discussed? Why are we now talking about Bitcoin as something that might, be beneficial to the Greek people? What actually happened in there was that the Greeks had their access to their bank accounts almost entirely severed. They could only withdraw around 60 euros a day.
Yeah, that's still, I'm assuming that's still kind of in effect.
Some of those capital controls have been lifted when the bailout came and loosened. There are still some in place, but it's better than it was, during the actual crisis itself. But this sort of became a ritual for folks to line up at the ATM in the morning to be able to get their 60 euros out, to be able to, buy food and whatnot. And beyond that, they also couldn't use credit cards for international business. The credit system basically was now bifurcated between anyone in the world, that previously could use credit, and the Greek people who now just can't use it. So the imports and exports business was really, really essentially shut down for a while these talks were still going on. So people say that system is very controlled and requires permission, and maybe Bitcoin is something different. And so Stephen can talk about what that difference looks like.
Yeah, so this is a perfect example of what the creator of Bitcoin had in mind when he envisioned this alternative system. So Bitcoin, in contrast to the centralized banking systems of Europe, is a decentralized system, meaning that in order to use Bitcoin, in order to use the currency, in order to spend Bitcoin, you don't need any permission from anybody. You don't need the government of Greece to say you can spend your money here, you can't spend your money there, you can only have this much, you can only withdraw that much. It was designed to be a trustless, permissionless system, which from a purely technological standpoint is a remarkable feat. And Bitcoin has been successfully used for several years now as an alternative to the traditional banking system. And like one of the main questions, imagine that you're in Greece right now, and the question is put to you, who do you trust? Do you trust the Greek government, who's been making promises that they can't keep, as evidence they can't keep, because that's why they're in the situation they're in now? Do you trust the banks that close their doors and say, oh, you can only withdraw 60 euros a day of your own money, and in a lot of places it was actually 50 euros? Who do you trust? And really, what's the alternative? And so this is just a wonderful reason that Bitcoin was created as an alternative. You don't need to trust anybody. If you have access to the Bitcoin blockchain, the Bitcoin network, you're kind of outside of that system.
Yeah, I think that the trustlessness was easily one of the biggest things that got me into the space, and that includes, I think, the 21 million cap, so that the government cannot manipulate the value of your money ever. I mean, there's a certain kind of inflation right now, but it's different, and there's still always going to be a hard cap of 21 million Bitcoin, and that's been huge for at least in my head. I haven't had to put that to use necessarily yet, because my dollar, as much as it doesn't make sense, it does still have value. So I haven't had to put that cap to use yet, but that's what gets me. So
yeah, that's a very, very important value proposition that Bitcoin brings to the table. And so part of the Greek crisis, there was a possibility that Greece, if they didn't get bailed out, would have had to exit the euro and create their own currency, go back to the drachma. If that was very, very close to actually happening.
okay.
If that had happened, the value proposition of Bitcoin would have been that much more appealing, because what would have inevitably happened is the Greek central bank would have printed drachma after drachma to pay the pensions, to keep their promises. The value of their currency, as has happened in so many other countries around the globe, the value of the currency would have collapsed. And so right now, the Greeks might have some a draw to the avoiding capital controls using Bitcoin, but undoubtedly, if we were talking about drachma, it would be a fantastic alternative to centralized money printing.
And I would add that initially, this is not just people who are big evangelists for Bitcoin who sort of say, hey, this is a really neat technology, saying here's a use case for it, which is avoiding nation-state fiat currencies that are going to be suffering from inflation or whatever. Satoshi Nakamoto himself, which is the pseudonymous identity of the person who or people who created Bitcoin, actually put a message in the very first block ever created in this blockchain. And the message was a headline on the day that he created the first block, which said the Times, January 3rd, 2009, and the headline was Chancellor on brink of second bailout for banks. And if you recall, back in 2008, 2009, this was during the financial crisis when there was a lot of governments engaging in sort of crony relationships with banks to bail them out and keep them afloat. And I think this highlights, I don't think this was a random headline that Satoshi chose that he saw lying around. He recognized what he was doing was an alternative to the existing financial system. So, while we'll talk about in a minute whether or not this is, realistic today, but I think he recognized that if this thing took off down the road, it could be something that would actually be able to be used for that. And
shortly after that, I don't remember when now, but you had the Cyprus bank runs, and you had another example of another example of evidence why you shouldn't trust banks, because when the Cyprus banks closed down, they took a depositor's haircut of 10% off the top. All of your money over a certain amount in Cyprus banks, 10% of it went to pay bills. Another example of, is there an alternative to having to trust these centralized monolithic institutions? Right,
absolutely, and that's it's hard for some people to see, because they just assume, oh, it's a bank, it's there to keep my money safe. That's its whole purpose.
Right.
But it doesn't always work that way. So, yeah, it's been crazy seeing. Yeah, I remember Cyprus. That was that put Bitcoin way up there, and that was a big event to attract a lot of attention. And I guess that also begs the question about now and with Greece. I mean, the Bitcoin price definitely, it shot up probably 30 or 40% over the course of 2-3 weeks. And I feel certain that Greece is at least a factor. I would wonder if you think that it's the Greeks themselves or just people thinking about Greece and maybe buying up just because they see what could happen.
My guess, if I'll answer that one first, my guess is that it's not Greeks themselves, because you had strong capital controls in place. So there couldn't have been that much flight from the actual Greeks to buying Bitcoin. Now, it might have been investors around the globe thinking, hey, could this happen here? Could this happen there? But I'm not sure. I think it'd be very hard to tell. What do you think, Sam?
Yeah, it's almost certainly not Greeks who were behind this run-up, not directly. If you look at some of the main exchanges and some of the places that sell Bitcoin, they specifically state that the amount of Bitcoin bought in Greece itself was not substantially higher than previously, although it was very low to begin with. But there was an increase in some other European nations, especially Germany. But a much bigger picture, apart from the Greek story, was just, I think, somewhat coincidental, where China actually started to get back into Bitcoin a lot more. If you recall, the original huge run-up in price back in 2013 was largely a result of the Chinese driving a whole lot of the demand for Bitcoin. So I think the narrative around Greece driving the increase in Bitcoin is, as you said, I think it's probably a factor, but much more likely that there are other stronger factors that just coincided with the Greek story than Greece itself.
Okay, yeah, I think I would agree. The fact that they couldn't really get their money means they couldn't really buy Bitcoin. And I know a lot of services stopped accepting Greek credit cards, stuff like that.
Yeah.
But I think, like you said, I think it was probably a Coinbase tweet, and they said that Bitcoin buys in Europe, or it was some statistic that was up 300%, but they said not Greece because they can't. So yeah, I think that makes a lot of sense. But let me ask this: suppose there were no capital controls, do you know any idea what the popular kind of attitude is towards Bitcoin and decentralization is in Greece? Is it something that they would have been interested in?
No, unfortunately. I'm the chief operations officer for a company called OB1. We're the company that's trying to create and publish this software, Open Bazaar, that you mentioned earlier in the introduction. We have one employee who is Greek and works in Greece, and we do actually pay him in Bitcoin, but he is an anomaly, big time, because the Greeks in general are completely unaware of the existence of Bitcoin, much less, they have an opinion on it. It's just not something that's entered the public sort of consciousness yet. And this is through talking with him about this, but as well, people like Andreas Antonopoulos and others have said, Bitcoin's just not really a thing in Greece yet, which is true of a lot of countries, right? It's outside of, of course, Greece is a developed nation and very, technologically advanced, but outside of, a lot of developed nations, it's just not really gotten a lot of people's eyeballs on it yet. Which isn't to say that it wouldn't be useful to them had they known about it, of course, and before capital controls went into place, but they weren't aware of it largely.
Yeah, I think in my mind, the opportunity here is not actually for the Greeks. I think that window has passed, given that the capital controls are already in place. I think the real story of Greece is a lesson to the future countries that are going to be in the position that Greece was in a few weeks ago. So you have countries, the most popular countries, the most well-known countries are Portugal, Italy, and Spain, that already have extremely high debt-to-GDP ratios. They already have the same kind of leftist governments that are spending more than they're taking in. And right now is the time for those people, if they're interested in trying to protect their wealth, to get into the Bitcoin space. And it's very important. Greeks who were aware of Bitcoin and who were able to get in before the capital controls, they might have avoided some of this pain. But you can't wait till after the collapse happens, after the bank runs happen. You've already missed the opportunity. And it's not just Portugal, Italy, Greece, Spain. it's also Latin America. There's several countries in Latin America that also have very high debt to GDP ratios. This is a global phenomenon. Even Australia has, I think, almost 70% now debt to GDP ratio. So it's very possible that the lessons we've learned in Greece are going to be more and more relevant for people, even the United States. I mean, who are we kidding? The United States has a massive debt to GDP ratio. And we could take those lessons and apply them here now before the capital controls hit.
And I'd like to add to that, Stephen. I think that's a great point. And just say, Bitcoin isn't the answer to all problems, right? It's not a panacea. The crypto community, which I love and am very much a part of, sort of has this hammer of decentralization, and every crisis they see is a nail, right? They're trying to apply Bitcoin to everything that's happening. So, if the question is Bitcoin the answer for the Greeks now, I would say the answer is no, with some maybe limited exceptions. Because, as we mentioned, Greece had capital controls in place already, so it's very difficult to even get Bitcoin. It's a liquidity crisis, right? They don't have access to the money they need. They can't get money in or out. Greece is also largely a cash-based economy. They have a strong history of trading in cash, a strong history of tax evasion, a strong informal economy, which are all, kind of cool to some of us, sort of like agorists out there. But they're not really that, from what I've heard, they have not used they've not really completely embraced electronic payment systems. So I think Stephen's right that Greece actually isn't the place where a lot of this is most applicable. It's the places that could look like Greece in a few years if they don't change their economic situation. And considering the track record of governments, I think most of them are not going to change their situation. They're going to go right where Greece is now.
I did too want to give a shout out on that topic to the Greek people. I read a article in the midst of the beginning of the Greek crisis. I think it was on Yahoo News or something. It was saying one of the ways that people were preparing for bank closures is by growing their own crops. You essentially had the Greek prepper movement out there, and maybe they would have been laughed at for a while, but you got to think those people, if they were, you want to call them preppers, had some foresight to say, hey, I see ominous signs on the horizon. Maybe I'll plant some vegetables in the backyard. I'm not a prepper myself. I wish I had a garden or something, but I don't. I just think it's neat that this is a great justification for people who are maybe a little bit, conspiracy minded.
Right. Yeah. It is. It would be a big deal if more than Greece started to collapse. There would be some serious repercussions. And I like your point about the fact that the U.S. is not really that far behind the same kind of situation. I mean, these are numbers that people like to talk about a lot, so maybe people have heard them. But if not, the U.S. GDP right now is almost 17 trillion, and the debt is 18.3 trillion. So it would take us a full year at the very least if we had zero expenses to pay off the debt. So that doesn't
even bring in unfunded liabilities. This is just debt that's on the books. And I remember for a long time economists used to say that the threshold for when a country was underwater was a debt to GDP ratio of 100%. That was the waterline, and now we've passed that, biggest economy in the world, and people are like, not a big deal.
And in some ways it's worse than that, because we're not even talking about servicing the debt, and we're talking about interest rates that are effectively zero right now. We're very close to
and have been for 6 years.
And have been for years and years. This boggles my mind. I don't want to go too far down this path because it's not related to Bitcoin or Greece, but if we have, 17 or so trillion dollars in debt, and our interest rate goes up to, say, 10%, which historically is not unusual at all, then we're talking about $1.8 trillion annually just to service the debt. Right. And, that is a huge, massive number. I don't know what taxation coming in is for the federal government, but I mean, that would be pretty much, most of the taxes coming in just to service the debt, not even pay for our social safety net and military and all that stuff.
And for some historical perspective, when inflation was getting out of control in the late 70s and early 80s, you had interest rates over 20% to quell inflation. And I want to say, too, to add to that, a lot of people, if you read the commentary about, well, the United States is in a unique circumstance, it's not related to Greece, they say it's because the United States is a currency issuer. They say, oh, well, Greece was in a problem because they couldn't print their own euros. And this, in a very superficial sense, is true, but it is reflective of kind of a potentially deeper economic problem that the United States can print their own currency to pay and service the debt, which means that inflation is likely, if that's the route that the central bank takes, inflation is a very likely outcome, which, bringing it back to Bitcoin, gives the value proposition of Bitcoin being capped at 21 million Bitcoin, that much greater.
Join the club, join the club, join the Bitcoin Talk Club.
A new forum sensation is coming to a computer near you. A site that adapts to its users and tailors to altcoins. Are you a coin developer looking for a home? Look no further than the club. Have your own section and moderate it yourself. They're looking for members to help build the club into a one-stop resource for everyone's needs. They're looking for you at bitcointalk.club.
Join the club, join the club, join the Bitcoin Talk Club.
I want to, we've had several questions coming in for a while, so I guess I'll just take them in order one by one. First one I see here is, do you guys think that services such as BitReserve or perhaps CoinJar are a good alternative to bank accounts for avoiding Forex fluctuations and economic uncertainty? Do you know what either of those are, BitReserve or CoinJar?
Yeah, those are attempts by, I think those are both companies specifically, who try to basically lock in the price of owning Bitcoin, and then you can access and spend your Bitcoin as though it were, a more stable currency in a bank or something. I would say the market will decide that, right? Like, I can't say, oh yes, this is going to be the standard way that people are going to use Bitcoin in the future. I will say volatility is, of course, one of the main drawbacks of using Bitcoin as a day-to-day medium of exchange. But if you look, historically speaking, volatility has been going down as adoption increases. So this may be the market finding a price for something that is a thinly traded market, and so volatility is high. But in 10 or 15 years from now, if Bitcoin becomes widely adopted, and if we get things like derivatives and short selling and all kinds of different financial tools, then I think it's much more likely that volatility for Bitcoin as a whole is going to be substantially reduced to the point where these services may not even be necessary. So in the meantime, I think they probably are going to be useful and will be more widely used than they are today. But I don't actually think long-term it hinges on having those third-party services that peg the price of Bitcoin.
What I'd say is, if you're looking for a stable currency that's not going to fluctuate in value, that you don't have to worry about, get away from Bitcoin. It's too early in the technology to, I think that you're going to have a perfect trustless system that isn't going to deal with volatility, because then you still have to trust the company. If you're using BitReserve or some of these third-party services, you still have to trust that they're going to honor, whatever contract they're a part of. And I just wanted to comment on what Sam was saying about the volatility. I think we're still years and years away from seeing volatility diminish to a point that, like, we're used to normal currency fluctuation. I think because, number one, the market right now as it is fairly small. but you got to think of all the different variables over the next several years that are coming into play. So you're going to have, as we sort of saw in Greece and we've seen in China, you're going to have, I would say, likely waves of countries that are going to go through economic trouble, that are going to be attracted to Bitcoin. What's going to happen? Well, that's going to it's going to spike the price of Bitcoin. You're going to have a lot of profit taking. It's going to make the price of Bitcoin go back down. And then on the other side, you're going to have developed countries that are going to come up with harebrained regulations, which are going to, kick a lot of people out of the Bitcoin market, and you're going to have the price go down. You can have companies, move overseas. So I think it's going to be a while before we have any kind of stability in terms of the Bitcoin price.
Yeah, and I totally agree on that, and that's something that's important for people to remember, is that Bitcoin, we love it a lot, but it is volatile, and that can cause problems for some people. So just keep that in mind. And another thing, you mentioned getting away from Bitcoin, and I think you were talking about those services like BitReserve and CoinJar, but you said, get away because Bitcoin is new and it's you don't know what's going to happen. And it's kind of the same thing. As much as we love Bitcoin, that's something that you have to remember, is that Bitcoin is completely new and nobody's ever tried it before. And so we don't know. We don't know we can't predict what could happen to Bitcoin in the future because we have nothing in the past to go on. So yeah, we love Bitcoin, but if you're going to get into it, just remember that it's still new and nobody knows. So
yeah, no, I think that's really important to highlight, and I think we sort of assume coming in that a lot of the audience understands the fundamentals of Bitcoin and understands the inherent volatility. And if folks aren't that familiar and you want to go out and invest your life savings in Bitcoin, I would suggest you don't do that. But one thing I would add too, though, is also you got to think about the opposite, which is can we predict the future of fiat currencies?
Oh yeah.
And I would say we actually probably can predict the future of those, maybe even with a little more certainty than Bitcoin, because the history of basically all fiat currencies is eventually for their value to go to zero.
Oh yeah.
Right. So now to be clear, I'm not predicting this is going to happen quickly, or that Bitcoin is a better investment than the U.S. dollar, which is pretty strong right now. Just historically speaking, fiat governments abuse their power to publish money, and they will eventually lose their value completely over time. So yes, Bitcoin may not do that, which is an exciting possibility.
And I want to contribute to the doom and gloom here. When people, natural, sensible questions say, well, how then can you protect your wealth? And I'm not going to give a bunch of financial advice, but you have to keep in mind that there's literally no way to avoid risk in holding any currency. If you're holding dollars or euros, or if you were holding drachma, if the Greek government was printing drachma, there's obvious that your money would be devalued. Well, what's the alternative? You hold Bitcoin, well, the price could go up, the price could go down, the technology could break, there could be some bug that nobody's discovered. That's a big risk. What's the alternative? Well, the traditional alternative is things like gold and silver, but even then, historically speaking, number one, the price has been very, very volatile, but also for decades in the United States, it was illegal for private citizens to hold gold. So you even had intervention in the traditionally stable asset that we think of, gold. Even then might not actually be perfectly secure. People were jailed because of holding on to their gold heirlooms. There's no way to have a riskless currency.
And I know this is sort of science fiction at this point, but 50 years from now, if we have private companies who are attempting to mine asteroids for precious metals, we may be able to pretty easily, double the entire gold supply of the world and value that, right? So, that Stephen's point is, I think, value is subjective, and you're never going to have one medium of exchange, one store value that is ever going to be stable. And, you just have to recognize that that's the truth.
Yeah, I think I agree. That's and then I guess the result of that line of thinking is, to some extent, it's probably wise to diversify.
Precisely.
I do have Bitcoin, I do have silver, I do have dollars, I have Not my own house, but I live in a house that is owned by someone, and we even have my family has a whole bunch of cows, so I'd be well fed for quite a while. So.
That's a
Anyway.
good commodity to have. Yeah.
That's a good way to diversify, I guess, if it'll keep you alive. Anyway, I want to keep rolling through these questions. The next one I see here is, and I lost it. There we go. While Bitcoin could help retain, this is from guest George Patterson. So I don't know, is that a brother, a dad?
That is
It's
a
a
third brother. brother.
Patterson brother, yeah.
All right. Well, maybe someday he'll be a Bitcoin brother. Anyway, while Bitcoin could help retain the value of the Greeks' money, how would it help them in day-to-day transactions, i.e. buying groceries and paying bills?
That is a really good question, brother. So actually, maybe he's setting me up to give a pitch for the project that I'm working on. I don't know. That was smooth. If so. But so right now, as I mentioned earlier, Greece has not really adopted Bitcoin to any extent. They're not even really that knowledgeable of it. So it's not as though the average store owner is going to, have on their window a sticker saying, "We accept Bitcoin," and they'll, happily take it. So I don't think necessarily today that it would be all that useful for obtaining, goods and services on the street. However, there is a project called Open Bazaar, which I've mentioned, which is trying to create a decentralized marketplace that no one controls. You run the software locally, and it connects you to other people using the software locally, and you exchange goods and services with Bitcoin. And there's one particular reason why Open Bazaar, if it were in a consumer-ready version today, which is not yet, it will be hopefully in this fall, would be really useful for the Greeks during this crisis, which is they had their import-export industry effectively destroyed when credit cards were banned for them to engage in international trade. So their supply routes to get goods and services in and out were more or less shut down because of their capital controls. Now, if you had this international, global, borderless, decentralized market in place for people to buy and sell things using Bitcoin, you completely circumvent all those controls as long as you have Bitcoin to use. Now, that's at the sort of international commerce level. It would still allow them to engage in international trade. Down at the local level, you can filter these networks by location, by the local level. So were people to adopt both Bitcoin and Open Bazaar, they could have a robust marketplace of trade occurring locally, getting around all the restrictions that existed in place. Now, that's in the future. This is how other countries can benefit from these technologies down the road, not necessarily the Greeks themselves.
Oh, I think we lost your audio.
Sorry, yep, I was muted there for a sec. Before we move on to any other questions, we keep saying that the Greeks right now, Bitcoin, it's too late. It can't help them very much. And so I wonder, let's say I am a Greek. What kind of situation am I in right now? Is my money still usable now after the latest bailout or whatever help they got? Where am I gonna end up losing all my money and basically having nothing but whatever physical things I have? What situation am I in?
So I don't think anyone knows for sure, of course. What I'd say is it depends on your time horizons. Right now, my understanding is there are still some capital controls in place, but they've been loosened from where they were a few weeks ago. So you can get more money out than you could before. You can begin using credit, sort of internationally. That's in the short term. Right now, sort of a sigh of relief, and many people are saying, "Oh, we're glad it's over." In the medium to long term, this is all going to happen over again, right? They've solved nothing. There's nothing structurally that's been changed. I don't think the austerity cuts are actually going to prevent this from really happening again. So, yeah, I don't know, Stephen, if you have thoughts on that.
I'd say in the short run, the bailout was good for the Greek people in the sense that I don't think they're going to lose all of their euro. They're still in the euro, which benefits them way more than the rest of Europe.
Right.
And right now, it's still, as far as I can tell, an open question as to whether or not there's going to be any kind of depositor haircut. There was rumors going around that there was going to be, and there wasn't going to be. I think it's still an open question, but that's probably not going to happen for a while because Greece did make their big $100 billion payment or whatever it was, their latest payment, I think, to the IMF. They made that and that cleared. So I'd say in the short run, they certainly benefited. In the long run, in fact, I don't think it's just Greece. It's all of Europe is going to be going through this because you're going to have the Greek crisis 4.0 because this has already happened a couple of times. But then you're also going to have the Portuguese crisis. You're going to have the Spanish crisis for the same exact reason. So when that happens, it's not. I don't think it's going to be very pretty. And I will say, just as an interesting note, there's this dynamic between the U.S. dollar and the euro that a lot of people are talking about. Because you look at the fundamentals of the U.S. dollar doesn't look that great. But in contrast to some of the fundamentals in Europe, U.S. dollar might look a little bit more attractive. And indeed, that's what a lot of investors have been fleeing to. They've been fleeing the euro into dollars, which, from my opinion, is kind of out of the frying pan into the fire. But I think that also kind of our system, where, like we said, we're already, I guess, over 100% debt to GDP ratio. That also is kicking our can down the road for us in the States, because there's a lot of money overseas that's invested in euros that if a lot of stuff starts hitting the fan over there, it's going to come over here and perpetuate the system that much longer.
And this is without even discussing other markets in the world apart from the European and American. China is in the midst of a huge stock market crisis. Their stock market dropped about a third over a few days, and they stopped trading. They didn't allow a lot of trading in certain equities. They just prevented it from occurring.
Well, they prevented selling.
Yeah.
You could still buy.
Yeah.
That's so bizarre. But I mean, that is a centrally controlled economy in many ways, although more free than some other economies that are supposedly free. Anyway, what are the implications going to be of that down the road as well? I don't know. But it's clear, I think it's clear, that the global crisis that we had in 2008, 2009 is not some isolated, once-in-a-generation thing that we're not likely to see again. That's going to happen, and probably a lot worse than it was a few years ago. I don't know. That's up for debate, but Bitcoin can be an alternative for people who are concerned about that in the future.
Yeah, it seems like maybe today a Greek he's getting by. There's limited access to capital, but he's getting by. But yeah, you both of you are just kind of saying there's a whole lot to be seen, and all these different countries could be going through who knows what. So I
want to add one more thing to that, because when you said it, just popped in my mind. Keep in mind that if the Greeks did not get a bailout, people were already talking about setting up humanitarian aid. If they were going to be forced from the euro, I mean, we're talking serious humanitarian aid going into the civilized country of Greece. That was like 24 hours away from happening had they not come to that agreement.
Yeah. Wow. Yeah. So it definitely could be serious, and who knows? Maybe it can be avoided with if people start thinking about Bitcoin, but probably not for everyone. But anyway, I do want to grab a few more questions. The next one, especially because it's such a hot topic, I guess, and I'm sure we could probably fill a whole nother hour with this discussion, but we will try to keep it as brief as possible. The question is just, do limitations depend on the block size? And I'm not 100% sure what he means by limitations, but I want to get maybe your quick takes on the block size debate, because it is something that's been going back and forth. People are biting each other through Twitter and everything, talking about the block size. And I'll say as briefly as I can, basically, for anybody that doesn't know, every block Bitcoin is mined in blocks. I'm going to make this as simple as I can. Right now, there's more or less an arbitrary limit on the size of every block, and that limit supposedly sets the capacity of the network. So right now, theoretically, the network can only support X amount of traffic because of the block size is 1 megabyte. And some people want to increase it to 20 megabytes because then we can support a whole lot more traffic. And other people say it's too much of a change. We can't risk changing something that significant. Let's leave it at 1 megabyte, and the free market and transaction fees will come in, and everything should balance out no matter what the size is. So let's leave it alone. I think that's some decent coverage of both sides, but I want to know if you agree with what I just said, and then which side, if you have a side.
Yeah, I think that was a good overview. I don't know if I'd say I pick sides. There's so much to this debate. It's been going on for well, it's been going on for years, but it's been going on very vociferously for the past several months. And there are people who are much more knowledgeable about Bitcoin who have taken, a very strong stance, and both on the tech and also on the principles behind Bitcoin. And so all that I will say is this: I love to see markets develop, and I have nothing against seeing a fee market develop for people to pay different amounts to get their transactions into a block if the blocks are capped. I don't have an issue with that. But the question is, are you artificially reducing the supply, if you will, of blocks too low by making it 1 megabyte? Because as you said, that is an arbitrary number. And I would argue, yes, that 1 megabyte is too small of a block size. I don't know what the right one is. This is what a lot of the debate is. But Satoshi was very clear when he put the block size in place that this was a temporary anti-spam measure, not meant to say, I want a fee market to develop around 1 megabyte block size. So I'm in the more of the camp to see it expand up to maybe 8, and then allow fee market rules to develop to allow that to fix the size around there. But I don't know. There's a lot of smart people on both sides, and either way, I'm glad that there's a robust discussion happening, because I'm sure something good will come out of it eventually.
Yeah, I pretty much agree with all that. I wanted to make sure that we got out there that a lot of people don't know Satoshi. I mean, you can look at the the forum dialogue, or maybe it was an email or something, where he said very explicitly, this is temporary limit to the block size with every expectation that it needs to be raised in the future, or even entirely eliminated in the future. Yeah. And I'm not an expert on all the nuances on it either. Originally, when I was listening to this and trying to understand what the debate was I was very strongly for a block size increase, but there are compelling arguments to be made to say that if you increase the block size too much, you're going to have an inevitable centralization of miners. And I think that's going to happen anyway, but it is at least disconcerting to see that one of these foundational premises of decentralization is going to be affected by increasing the block size. That being said, I think it should be done, and I think I'm sure people won't like this, but I support the idea of the Blockstream, the Blockstream company. If people who aren't familiar, there's a group of people out there who want to innovate on top of the blockchain in a lot of different ways, but one is to allow for what's called payment channels, which essentially allows for virtually instant transactions that aren't all recorded on the blockchain, so you won't have as many transactions being registered in the blockchain, which a lot of people are saying, well, that might solve a lot of the issues of the blocks filling up because you wouldn't have all the transactions going to the blockchain. And it would also allow, like I said, for instantaneous payments, which would be great. But there's there's a big trade-off for, is that changing the core code too much? Are there conflicts of interest going on with the people who are working on the Blockstream code? It's kind of a quagmire. But if I had to put my 2 cents anywhere and say that the conservative, responsible thing to do is probably to raise it, 4 or 8 megabytes, at least for the time being, before we have a better solution.
Right. That's more or less the point of some of the first articles I ever read on the subject by Mike Hearn, and he was saying, I love payment networks, and they might be able to help us down the road, but the bottom line is we don't have time, so
Right.
let's raise it and then get payment networks. And but I also completely agree. It's such a complicated issue, and I'm not the technical expert by any means. So yeah, and like I said, we could probably go on about this for an entire hour. So we will wrap up that part. And I do see one more question. I'm guessing this will be our last one. And this comes after about probably 40 or 50 messages that people are joking about being, what, 7 or 8 or 12 Pattersons or something. And then there's a question from there's a question from Julia Patterson.
That's my wife.
Oh, nice. Okay, so here it is. Do you guys have any insight on how to educate the Greek people about economics/Bitcoin? Do you think there needs to be a drastic culture change before we see any movements toward other currencies or commodities? I think this is a little bit like when I asked what the popular attitude is there towards Bitcoin, but we'll put it out there one more time. Is there any way we could educate them? Do we need to educate them? What should we be telling them? How should we be changing the culture? Yeah, go for it.
I think that's a good question, and naturally, because my wife asked it, there's actually a video out there of the Greek crisis. Maybe it was the Cyprus Greek banking, or it was one of the banking crises in that area in the Mediterranean. And there's a video of a bunch of citizens lining up to get their daily ATM withdrawal. This was years ago. And what was fascinating about the video is the attitude of the people that were in the ATM line. It wasn't, oh, anger, this is crazy, I can't believe this is happening. It was like, oh yeah, well, that happens. I mean, that we gotta, they're the bank, it just happens, we gotta deal with it, we're gonna be good citizens. And it was this very different response that I would imagine a lot of people would have. And I think that's reflective of a kind of culture of acceptance towards other people managing your money and other people screwing it up at times. So I think there is something to be said for education, not only in terms of sound economics and the Bitcoin as an alternative, and the way that we could do that is by sharing resources like What's the Big Deal About Bitcoin with people, which is free on LibertyMe, and Sam's book and Sam's guide. But in terms of how to change a culture, I mean, I think that's really hard to do. Maybe set an example, maybe show somebody that there's an alternative. I'm not sure.
Yeah, I don't actually think that you can, or at least it would be immensely difficult to really do it, and there'd be some sort of fundamental crisis that would have to organically, a bunch of Americans I don't think could fly over there and somehow convince them of something. It would need to rise organically from within. I don't know what that looks like, but I'll say this: I think a much more powerful approach is actually building the tools and the technology that makes their lives better and showing them how it makes their life better, not based on ideology or culture. And I'll use OpenBazaar as an example here. There's a lot of people in the Bitcoin community who are super excited about OpenBazaar because it's a decentralized market for their decentralized money. They're just ideologically aligned with the idea of having more control over their trade. There's also a lot of people out there who are paying 10% fees to sell things on eBay. So which line am I going to use when I'm trying to drive for mainstream adoption of OpenBazaar? This is decentralized trade that's peer-to-peer and pseudonymous, or there are no fees, right? I think most people are going to recognize the power of controlling your own trade and having zero fees more than an ideological belief around decentralization or freedom. I think that's true of Bitcoin too. Most people, I think, are going to probably be using Bitcoin at some point, or something like Bitcoin, well into the future. But I don't think it's going to be because they understand, Hayek. I think it's going to be because it's a better system. So
I think that's a good point. I think it's a good point, and there's lots of good examples of that, right? If you're trying to convince an older person about the benefits of Uber and how great it is, you just pull up your smartphone, they're like, everything, my system works fine. But you show it to them, you say, look, this is, boom, hit the button, good to go, don't have to bring out your credit card, just do it. Never mind that it breaks down the taxi cartels, and it's just that much more convenient of a system. Same with email. I try to explain the technical details of email to somebody, like, oh yeah, you can, peer-to-peer in a way, and blah blah blah. It's like, no, type in the stuff, hit enter, and they get the message. That's all they need to know.
Yeah, absolutely. Yeah, we were just talking. Actually, it's an episode that should go out very soon. We were talking about the TED Talk. People don't buy what you do; they buy why you do it, and it's true. You show them what's great about it. It doesn't matter what's behind it, the technical stuff. You just show them why it's great, and people buy it, and that's great. So we definitely hope that some people do buy it, and they buy the ideas eventually, maybe buy some Bitcoin. Stay safe from any impending crises. Definitely, I'm showing exactly 10 o'clock, so it's about time to wrap up. I want to offer a huge thank you to Sam and Steve Patterson for being here. Sam's the author of Up and Running with Bitcoin, which is available in the Liberty Me library as a guide. And Steve wrote What's the Big Deal about Bitcoin, and that is available as a full-length, larger book in the Liberty Me library, both completely free to Liberty Me members. So guys, thanks for being here. The very last thing I'll do is ask if there's any way that people should be connecting with you, reaching out. I don't know if you want to share a Twitter handle. I know we've got Steve's website. I don't know if you want to share your email, or if you're on Liberty Me, how should people be finding your stuff or connecting with you?
So for me, you can go to steve-patterson.com. I've got the little buttons you can click, which will take you to my Facebook, to my YouTube channel, and to my Twitter. You can also send me an email at steve@steve-patterson.com, and that's the best way to do it.
And for me, I have a website as well. It's samuelrpatterson.com. I don't have a lot on there, but you can check it out. My Twitter handle is @SamuelPatt, P-A-T-T. My email is sam@samuelrpatterson.com. And I spent a lot of time on the Open Bazaar project, so you may just find the Open Bazaar community and go check it out.
Yeah, absolutely. Check out, I hope everybody checks out all of that stuff, the book, the guides, the projects, the websites. Thanks again, guys. It's been so much fun.
Yeah, thanks. You have a good night.
Take care.
Yeah, and Liberty Me, thanks for watching, and we'll catch you next time on Liberty Me Live. Night, guys. Thanks for listening to episode 83. All of the music in today's show was from John Stewart. Remember to check out this week's show notes at youmeandbtc.com and leave us a comment. We'll see you live next Wednesday and for another regular show on Thursday.